All right, this is an outlook into Friday, June 5th. This is NFP day. This is non-farm payrolls at 8:30. We can see that the previous day left two large rejection blocks. Okay, the market tried to trade lower, failed, right? Where did it fail? Rejection block from Wednesday. Eventually tries to trade higher, but also failed, right? It ended up failing near the closure and found a reversal phase of price delivery in around the closure of the previous day. Okay, so we'll be looking at that on the lower time frame, seeing what these rejection blocks left behind. You can see that the market is now, right, it's creating a lot of volume imbalances, hence the choppiness, right? Usually that's what tends to happen when the market starts to stack up new day opening gaps or new week opening gaps all around one range. It tends to create high resistance delivery. Okay, we have to remember that the market comes from an expansion phase, right? And so the question right now is the question we're trying to answer is what's going to be the next phase of price delivery here, right? Is this going to end up being a retracement to trade higher, or a reversal to trade lower, or a consolidation? Or was this already the retracement, right? That can be a possibility also. But we have to look at lower time frames to be able to gauge what tomorrow will do, right? Because now we're looking at the perspective of a daily chart, and maybe the daily chart is not the right time frame to trying to answer the question as to what tomorrow will do. But we can nonetheless see what the market left behind, okay, in terms of premium and discount levels going inside of tomorrow. If tomorrow will be an open low high close day, I still believe that this wick should hold the rejection block from Wednesday. So this is a discount array inside of the range, right? You got the rejection block from yesterday also in discount. If not in premium, the main PD of interest, in my opinion, is the rejection block from the previous day. Okay, I believe that if this rejection block is broken, very likely the market will want to trade, if not to the highs, but the range near the highs. Okay, so you got a discount array on the daily being the rejection block from Wednesday, and you got a premium one being the premium rejection block left from the previous day's range. If we look at where we are inside of the dealing range, all right, we're currently, I mean, this weekly profile, okay, we'll look at that on the 4-hour, but so far price is trading around 25% of this dealing range. Right, so will it want to come back to 50%, or can it expand from these levels? Okay, well, that's something that we'll look at. We're going to try to answer those questions based on what the previous day left behind. Here we can look at the 4-hour chart. You can see that the market is still respecting, right? We here on the 4-hour, remember we have a dealing range low, okay, a dealing range low, a dealing range high, right? So an overall dealing range. This is from the previous week, right? The previous week on Thursday, had a shakeout lower, right? Overall respecting the range of a bullish fair value gap, and from there has traded higher inside the current dealing range high, okay, which is the high of Wednesday. And so far the market is trading around 50% of this dealing range, right? So on the 4-hour, I think that the level of interest going inside tomorrow will be the same as the ones of yesterday, right? Being the discount fair value gap. You can see that today the market has traded inside of these levels, right, and has expanded out of it, creating the range of a bullish order block. Now, if this bullish order block were to get displaced through, right, when I mean displaced, I'm saying either some kind of big candle at a key time of day, okay, NFP or 9:30. Because if it doesn't create a displacement around that time, right, and simply does something like this, right, it trades below it and then immediately starts to reclaim the range, then we cannot consider this a bearish breaker. Sorry. Okay, so still two relevant levels to have going inside NFP tomorrow: the order block, the premium order block, and the discount fair value gap. Here we can look at a 3-day look back chart. We can see the previous day's profile being what? Bullish New York reversal. But this bullish New York reversal found a reversal near its closure. Okay, low of day made at the discount fair value gap, high of day made at the premium order block. Okay, those were all levels that I was talking about yesterday. And one of the things that I was saying yesterday is that if 9:30 were to open in discount, right, so inside of the discount order block, be very careful to short, right? And in fact, from these levels, the market accumulates and trades higher. But this rejection here is important, okay, because had the market closed bullish, right, so with the daily trend that it had, then in my opinion we would be looking at, we would have been looking at, some kind of consolidation Thursday reversal profile. Okay, but the fact that the market tries to expand higher but then ends up revisiting the order block and fails at the order block, right, so it's creating balanced price range, bearish balanced price range, right, so fair value gap cutting through a fair value gap, and then leaves this breakaway, right, creating another fair value gap under it currently from the open. I'm not sure that this favors an open low high close weekly profile. In fact, we're currently trading essentially right about we're trading right near the new week opening gap. Okay, so in my opinion, it's going to be very important to see what the market does tomorrow. Does it first trade higher above the new week opening gap and respects one of these two fair value gaps? Then in that case, you can, in my opinion, anticipate an open high low close profile. On the other hand, if the market were to trade lower, okay, say further inside the order block of the dealing range low and overall the fair value gap that we have in discount, then in my opinion we can anticipate some kind of scenario like this, right? To me, this scenario wouldn't look like an expansion higher above the previous day, okay, because overall the trend of the week is bearish here, right? If we look at the 3-day look back, we can see that we have a bearish dealing range, right? We're not dealing inside of an higher high, higher low type of dealing range. Okay, we'll get more into this as we cover the ranges. We can first look at the range of the 3-day look back. And again, looking at this profile, this is kind of similar as to what I was saying going inside yesterday, right? When we have these kinds of profile, okay, these P-shaped profiles, these profiles typically tend to form on classic buy days, right, or classic buy weeks. Now, the market has formed this P-shaped profile, but look where price is trading at the moment, right? Price is trading in discount of the range. In fact, you can see that the previous day's high, right, comes back right at that order block that we were talking about and ends up failing, right, ends up creating bearish fair value gaps out of it. So in my opinion, this tells me that the high of week is in, okay? We can maybe use some of those standard deviations that I was talking about yesterday. Right, and you can see today making a low of day around 1 to 1.5, retracing and or at least expanded back inside of the range and failed, right? Fails at a fair value gap that cuts through the order block of interest that we were looking at. Okay, so this tells me that very likely the market will want to keep trading towards discounted prices. Okay, so that's that for the 3-day look back. Right, and what does this 3-day look back look like in terms of time-based profiles? It look like a classic buy day followed by a bearish New York reversal profile, right, closing very bearish, right, very heavy order flow at the closure of it, and then the open of yesterday, right, consolidating around it, trading lower into discount, tries to expand but ends up failing. Right, so you can see that the two bullish daily profile, right, because if we look at this 3-day look back, we have what? We have one overall bearish profiles and we have two bullish profiles. Right, and so far the only trend that the market is sustaining is the one of the bearish New York reversal. Right, because the classic buy, right, the market was unable to trade higher from it. And say even today's profile, right, sorry, not today, but in terms of a trading day, the previous day's profile, right, tries to expand higher, but then creates this at the closure. Right, whereas the only bearish profile, it's technically still respecting its levels, right, the fair value gap, the order block, and so on. Okay, so we can now look at the previous day's range. First of all, let's look at the profile of this curve. We have overall a double distribution profile. Price accumulates, distributes lower, accumulates, distributes higher, and then reverses. Right, this is a phase, this is a reversal phase. What's the difference between this price action or this price action and this price action? The difference is in the phase of price delivery. Here there was a consolidation to expansion, consolidation to expansion, but here we have expansion to expansion, right? Being distribution to reversal. Okay, now what did this range leave behind? Well, first of all, let's grade the range. Okay, let's go back on a 1-hour chart. All right, what can you see at the lower quadrant of this range? There is a bullish fair value gap, right? Now, although the 3-day look back here, right, is a bearish dealing range, in my opinion, we have a lower time frame dealing range here being the previous day's range. Why? Because this range had a double purge. The double purge being the low staking, the high staking, right? And today we opened right at 50% of this lower time frame dealing range. Okay, so inside of this dealing range, what do we find? We find a bullish order block here in discount. We find a balanced price range at 50%, and we find a balanced price range in premium. Now, because price opened at 50%, I think we can eliminate this balanced price range. I don't think it will be too relevant. I mean, it might be if you're trading Asia at the moment, then you can have these quadrants up on your chart. But I think that overall, either for New York or overall the daily profile, this bullish order block, okay, should be important. Why? Because if this bullish order block is displaced through, then this will become a bearish breaker. But on the other hand, if the market respects the order block, right, maybe even creates a divergence with the S&P 500 at these levels, because Nasdaq is currently trading much lower than the S&P 500. The S&P 500 is currently trading around here, right? Well, Nasdaq is already trading in discount. So very, very important level here. Okay, the hourly bullish order block from the previous day. This is the dealing range low, okay, of this lower time frame range that we have being the previous day. And in premium, we have the range of a bearish order block, right? So at these levels, the market expanded higher, right? Finds Then here we have the 2 p.m. open, okay, so PM session, consolidates for an hour, eventually Trump starts speaking at 3 p.m., and then the market reverses from these levels. Okay, so these are two relevant levels, the premium order block, the discount order block. They're relevant because the previous day in itself is a dealing range. Now, if we use the range of the 3-day look back, well, we obviously have a dealing range at the highs, and we have a dealing range at the lows, right? The one at the highs being the shakeout above the high of Tuesday, and the current dealing range low being the New York shakeout under pre-market lows, right? And so what, right? The same thing that we did grading the previous range, we can do so here. What do we have in discount? We have the range of a bullish order block, right? So this is the same order block from the previous day. At 50%, we have the range of a bearish fair value gap, right? This cuts through the order block here, and also, right, it cuts through the entire range from premium, essentially, right? So from the upper quadrant to 50%, you find this range of the bearish fair value gap and the bearish order block. Okay, so from a 3-day look back perspective, right, you can still keep these levels up and this bullish order block. These are the two relevant PD rays inside of the dealing range from the last 3 days. If you're grading price, right, these levels here, right, say this order block is maybe more useful in the moment rather than trying to anticipate the daily profile around it. It could still be that, say, the daily profile does something like this, but overall I would be using the levels from the 3-day look back. Okay, so discount order block so far will be, price is currently trading already at the moment in here, will be very, very important to see what it does through it, what it does around it, sorry. Does it trade higher to then trade lower? Does it trade inside discount of it, respects it, okay, by creating a divergence with the S&P 500 and then trades higher from there? Or does Asia displace it, right? That can be a scenario here. Asia displaces these levels, right? In that case, London or New York, in my opinion, will come back around these levels. But this will all depend on the session profiles, obviously. I mean, it's too early to say. Okay, so and one thing I wanted to add, say today will be an open high low close day. In my opinion, that's the anticipation for me, unless price trades lower in Asia, you know, without creating a high above the current high of day, right, without doing this, say, you know, then will all depend obviously on in the moment, right? But what I would want to see in the moment, if going inside New York we still have this intact, is a scenario like this, right? Price respecting the fair value gap from the 3-day look back and then trading higher. If not, if I see again a fair value gap through it, then very likely I will anticipate something like this, and this can be the high of day. Okay, so the reaction here around this order block will be very, very important. Okay, so keep this discount fair value gap, keep this discount order block, keep still the range of the premium order block inside of the last 3 days. Right, and if you anticipate an open high low close profile, well, very important to see how the market trades around this fair value gap, right? You would want to see the market create fair value gaps through, right? So SIBIs, bearish fair value gaps through the discount fair value gap in discount, and in that case, right, then you can start looking for discount targets inside of the overall 4-hour dealing range that we're trading inside of. Okay, so that would mean what? here, right? So in terms of ticks, around 50% of the order block at the lows. Well, overall the range of the order block, right? Whether it be 50% of it or the rejection block of it or simply the low, right? The low of the dealing range. So those would be your discount target if you're anticipating an open high low close profile. If on the other hand you're anticipating an open low high close profile, then again you would need to see a strong reaction at the lows. You would need to see the market hold the range of the 4-hour fair value gap in discount. But what I wouldn't anticipate is the market making a new high of week or even trading above the previous day's high. I'm not sure how likely that would be. Right, so if I'm looking for an open low high close, an open low high close profile, overall, since the week has been currently been chopping around the new week opening gap, right, I would probably look for a TP around these levels, right, and then the market to consolidate around it. Okay, so I'm primarily biased bearish coming inside tomorrow, but this will all depend on the delivery, obviously. Right? If it does this, then I can anticipate longs. If it does this, then I can anticipate shorts. If it does this, then I can anticipate shorts. Okay, so keep these two order blocks on your chart, right? These are the two order blocks of relevance inside of the dealing range that we're trading in. If the discount order block is broken, then you need to shift your perspective from a 4-hour chart, right, using a 4-hour dealing range. And if this dealing range low is broken, then you would need to use the order block from the 4-hour, right, to grade this level, and you see at what time of day and how is price trading around these quadrants. Okay, so I think that's it. So keep these two levels. Be mindful of the 4-hour range. The daily range, I don't think it's telling us so much yet, at least not so much relevant information for Friday. Now, if Friday closes bearish, then there will be important information on the daily, okay? Because we're overall inside of a lower time frame dealing range at these levels, right? And if today NFP Friday closes open high low close, very likely going inside the second week of June, it will want to revisit discount prices. Right, then we have an order block low and overall a series of volume imbalances, fair value gaps, right? So a suspension block at these levels. But that will be a topic for next week. Meanwhile, let's see how the market trades around the 3-day look back range and the 4-hour dealing range.